Welcome to 1031 University. I'm Paul Holloway. Today we are going to talk about the same taxpayer requirement under 1031 of the tax code. What we are dealing with is anybody who does a 1031 exchange, whether it be an individual or an entity. What you need to make sure of is that the same taxpayer that started the exchange completes the exchange when they go to buy their replacement properties. So if you start as ABC Corporation, you'll want to buy the replacement property as ABC Corporation. If you start as Paul Holloway individually, you will want to purchase the replacement property as Paul Holloway and not have any variation. That is the simplest approach to doing a 1031 exchange and satisfying the same taxpayer requirement. But what if you want to try and limit your liability by possibly putting the property into a limited liability company? Is it possible to do that and make it work? The answer is it really depends. So what we need to do is dig a little bit deeper into what the entity is that you are forming and decide as to whether or not this new entity will have its own tax identity or if everything will flow through to the underlying tax ID number, that being the number that started the exchange. So let's go ahead and say I'm doing a 1031 exchange. I sell the front end property as Paul Holloway individually. So I'm going to be reporting this exchange under my social security number. So the fact that I started with the social security number, the replacement property will need to be under the same social security number. So if my goal is to form an entity in order to limit my liability, so let's just say I form the PH LLC. Will that work under 1031 to satisfy the same taxpayer requirement? First question to ask, is there more than one member in this LLC? If the answer is yes, there's a very good chance that this is a partnership and therefore is an entirely different taxpayer as Paul Holloway individually. Yes, I am a part of this LLC with a couple other members, for example, but what I own is a personal property interest in a partnership. The partnership under its own tax ID number owns the real estate and will be filing returns separate from me individually. So that is fatal to the 1031 exchange. So if PHLLC is just Paul Holloway individually, no other members, then it is typically considered to be a disregarded entity under 1031 of the tax code, and it is therefore considered to be one and the same as myself individually. So this is what a lot of individuals will do in order to limit their liability moving forward. The same type thing can happen where ABC Corporation ends up selling. If they want to go ahead and form the PH LLC on the back end, of which ABC Corporation is a 100% owner of this LLC, I would say once again it is the same taxpayer and they are going to be okay moving forward, but definitely keep the CPA or tax attorney in the loop to make sure that you are structuring this entity appropriately to where you're not going to have any problems with the taxpayers being considered different. Other types of structures that you can do in order to limit your liability or estate plan and be considered one and the same as an individual on the front end, you could form a revocable living trust. That's what some taxpayers do in order to estate plan, but at the same time have this entity be considered disregarded from a tax reporting standpoint, and it flows through to my individual return, for example. In different states like Illinois, you can form things called an Illinois land trust. And this type of trust in the state of Illinois typically is once again a pass-through type entity that does not have its own tax identity and flows through to the underlying taxpayer to start the 1031 exchange. Another type of structure that you might find yourself purchasing as, let's say you're going to buy into a passive type investment like a Walgreens store with the triple net lease, and you're going to have other co-owners of that much larger investment. If they ask you to buy that property as a Delaware statutory trust, normally a Delaware statutory trust as well is considered to be a pass-through entity. And if I start as Paul Holloway, but I buy the Walgreens as a DST, then I believe that it's going to be something as well that is going to be considered the same taxpayer under 1031. But all the way back up to this LLC, if once again I start under my individual name, under my social, but then I buy this property with a couple other co-investors and form a partnership, that is problematic under 1031 of the code. So what you want to make sure of is, once again, the tax ID number that starts the exchange, completes the exchange, regardless of what the name is on the back end. If it is the same taxpayer, you have a good 1031 exchange. So this has been 1031 University, and if you would like more educational materials, you can visit accruit.com, or if you like this piece, please subscribe to our YouTube channel and be on the lookout for further classes. Thank you so much.